Guest on today's program. He's Dr. Anthony B. Sanders. He's the Distinguished Professor of Real Estate Finance in the School of Business at George Mason University. He has also been the head of asset-backed and mortgage-backed securities research at Deutsche Bank in New York. He's testified before Congress. He's given presentations in front of the central banks of Europe and Japan. And you're a lot smarter than I am, so I feel a little intimidated speaking with you.
I wouldn't say that.
Okay.
If it was that smart, I wouldn't be giving presentations in front of the central banks of Europe.
Oh my goodness, it's really that bad over there?
It's Europe.
Yeah, enough said. Let's, instead of talking about Europe, let's talk about the US. Let's talk about where we are today. We're about 4 months into the pandemic. States are at varying degrees of opening. Some are going full speed ahead, some are tiptoeing. Some, like New York's Governor Cuomo, is sort of shaking his finger saying, now you better behave or we're going to go back into lockdown. Where is the US economy as a whole at this point with all of this chaos going on?
Well, right now, as you know, if we look at a technical measure of GDP, gross domestic product, we've had two successive quarters of negative GDP growth, which by definition is a recession, which is not good. But again, a lot of that was brought up by the fact that we've had governors and some mayors around the country shutting down the economy because of the coronavirus. Well, again, we'll see. We'll see who opens up. Right now, China already said this morning there was a second wave that's going to be outrageous. How do we know if this is just pure scare tactics? I mean, it's really bad when China's over there and they can manipulate our media frantically with this stuff. And now we're getting echo terror, which means some, like, I won't mention certain media people coming out and say, oh, the economy is going to be the worst economy since the Civil War or something. And the answer is the economy is unusually strong. It's just that the metrics we're using, which are short-term metrics, are bad, of course, because we've shut down. But if they actually manage to reopen, everything will come back pretty well. I'm not saying a rapid comeback, like a V-shaped recovery. I'm thinking it's going to be more of a kind of an L with a little turn up, simply because I think you and I have discussed this before. Some employers are going to take the opportunity to not hire people back because they see that, oh, we didn't really need them. So this shutdown by the governors may turn out to be a folly in the sense that fragile workers in state economies, for example, may be the ones that get picked or get kicked out of the labor force. So this may have been their worst omen. But in any case, that's where we sit. We're in kind of like the L-shaped room, little tick up. I don't think it's going to come back as fast as President Trump has been trumpeting, but I think it'll be good.
Well, Trump, of course, is confident. Maybe some people would say a little bit too confident. But on the flip side, there have been people since November of 2016, most notably Paul Krugman, who've been predicting the economy was going to crash once Trump got into the driver's seat. So can we really trust the experts? I mean, if someone like Mr. Krugman, who is a Nobel Prize winner, has gotten it spectacularly wrong.
Well, well, there's two Paul Krugmans. There's one of them won the Nobel Prize, and then there's the guy that is just a leftist blowhard. He truly wants the economy to crash so we can get his people in there. And those are the kind of economists we don't need. There are really some great economists out there. I'm trying to think of who the great economists are these days. But in any case, there are some people out there that are quite good. And they're not blowing the horn of death and destruction for political gain. And that's kind of a disturbing thing to say.
One of the things I've noticed about the current economy, there are so many sectors that are collapsing. There are so many sectors that are feeble. But real estate, particularly residential real estate, has been rather vibrant. What's going on in the housing market that the rest of the economy isn't catching up with?
Well, that's an interesting case with residential real estate. Residential real estate is so heavily supported by the federal government. For example, we have Freddie Mac, Fannie Mae, and FHA out there. So they're still going along at pretty rapid fire rates. We're still seeing loan originations, although that was predicted by many to completely flatline to zero. It hasn't. Most of middle America, who are primary home buyers, are still moving along nicely. What's going on is at the lower end, where most of the job losses occurred with the shutdown, those people weren't typically home buyers anyway. They're mostly in the rental side, and Fannie Mae and Freddie Mac and FHA have come along and supported the multifamily market. So they put kind of a floor on the whole thing. So in other words, while it looks like it's going to be chaos in the housing market, it turns out the housing market for the middle class has been absolutely fine, because people will always pick housing over, for example, new car purchases or other types of things which they can postpone. But housing's an important asset for almost every household portfolio in the United States. Housing is number one. And so they will stick by housing above all things, which is good.
Well, here's a housing / economic question for you. I've been hearing a lot that companies that are in big cities, because of the pandemic, their workforces were working from home, many of them out in the suburbs. But that leaves a lot of people who were in the cities thinking, well, maybe I should be living in the suburbs rather than in the cities. If there's going to be an exodus of people from the cities to the suburbs, what happens to housing in the cities? And for that matter, what happens to the economies within the cities?
Well, again, that's one of those great questions. For example, office space. What's happening to office space in the United States? Turns out it's still going along, primarily because a lot of office space, for example, in the Washington, D.C. area, is government. And government isn't going to shrink its footprint at all. So office is doing great. Now, if you go up to your neck of the woods, it's not going to be doing as great. There's still a lot of office or government involved in office. But again, Wall Street companies, hedge funds, et cetera, how much are they going to continue working in New York versus going out to the suburbs? I think that's where we're going to see a bigger push. Because again, the whole thing with offices is that can you monitor people? Which I contended all along is the whole reason why we have offices in the first place. Yeah. It's not about exchange of ideas. You can, with the internet like this, with Zoom, you can get on a Zoom call and have a great conversation with a whole team full of people from around the globe. You don't need to be in the office. They even have a chalkboard feature. It's not a particularly good one on Zoom, but do have a chalkboard feature. It's all about having some administrator walking around and look to see if you're in your office working. It's not really about, it's monitoring. And that's it. There's no point to having everyone rushing onto the island of Manhattan to these super expensive properties. Yeah. We should see an outflow of people. We were predicting that wasn't happening because of the monitoring issue. But we should see, again, a more diffusion. Is there any reason why Wall Street can't be in Scranton, Pennsylvania? No, with telecommunications. There's no reason why you shouldn't be there. So we can pick up all the Dunder Mifflin abandoned warehouses up there. But again, it should be diffused over space with technology.
Yeah. But then if the New York offices are going to be half vacant or completely vacant, what happens to the rest of the city? The retail, the restaurants, the entertainment? It's all interconnected. But if something's missing, how is it going to be able to stay in one piece?
Well, it could be that the future of New York is the movie with Kurt Russell called Escape from New York.
Oh, no.
No, seriously. No, there's always going to be a demand to live in New York City. The entertainment. Again, it wouldn't be the same thing to get on Zoom and watch some Broadway musical. The whole ambiance about being in the audience and, et cetera. Restaurants, those are a hard thing to outsource to Zoom. So there'll always be a demand to live in New York, but that's going to cause the equilibrium house prices in New York to eventually come down if more and more people diffuse outwards to the suburbs. And again, it doesn't have to be the New York suburbs. If any of the states like Ohio get their act together, they could probably offer massive incentives to have people telecommunicate from Ohio or some other, I almost said bland state, but some other place which doesn't have all the sports. They do have sports teams. I know, well, sort of.
Yeah.
I was a Browns fan, so
that's okay. Sorry, Ohio. Okay.
But again, there's no reason why it shouldn't be.
But there is a problem within residential real estate in many parts of the country, including where I am up here in Connecticut, and that's inventory or the lack thereof. Uh, the builders, a lot of them are complaining that they're sort of hampered by regulations and zoning, and also the cost too. I just did an interview with a builder who said that about 25% of the cost of construction is tied up in regulation. So
Absolutely.
how do we solve the inventory problem?
Well, one thing they have to get rid of, and this is one of these things where a libertarian myself doesn't want to get involved in this, but it's a national crisis at this point. It turns out that what you have is you have like people in like Virginia where I live. I mean, you have to go through this incredibly cumbersome project to get anything built. You have to go lobby with the zoning commission, blah, 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 blah. And then maybe they'll allow you to put up some inventory. Believe it or not, the Obama administration, I think it was under Donovan, but it could have been one of the other HUD secretaries. They were trying to put in this neighborhood initiative where they were trying to build multifamily in very congested areas in Virginia and Maryland to try to get the people away from downtown Washington, D.C. And they actually had a rating of neighborhoods in Virginia saying if you don't have enough minorities living in your neighborhood, we're going to go through and build some multifamily out there. And again, that created a massive blowback because people that are living in suburbs are trying to avoid urban problems. And so they're kind of aghast about that. But because you pick a suburban location because of schools, access to location to business, et cetera. And if they change the dynamics of the neighborhood, like putting in a large multifamily project where the economics don't make any sense, it hurts the developers. So I'm actually I'd rather have more freedom of zoning. Can you hold on 1 second?
Okay, let's just hit the pause.
Pause.
Okay,
Right.
pause over. So as you were saying.
As I was saying is that the HUD, Housing and Urban Development, under President Obama was actually exploring this thing to try to loosen up local zoning rules to allow for more development, but that's gone away. And I don't see any movement from Ben Carson at HUD to do that. And again, it's kind of a states' rights, local rights issue, not necessarily a federal issue. And so I wish states would lighten, like Los Angeles, that's really heavily driven by local zoning boards, et cetera, who don't want, despite the fact that it's a crazy Democrat state, despite all we're all for this, and this.
Yeah.
They all say we don't want you in it's called NIMBY, not in my backyard.
Yep.
And so that occurs regardless of what state you're in. So we have NIMBY problems all over the place, but that's one of the reasons why we're seeing these incredibly high prices in Manhattan, California, DC, Boston, not so much in Chicago and Detroit. It has a little bit of that, but that's, so do I advocate a federal change in laws saying this zoning's outlawed? Actually, I don't think zoning does any good, but in fact, it allows for these type of problems. So getting rid of zoning would be a fantastic thing. I just don't think that's ever going to happen.
No. Got another question for you, Dr. Sanders. I recently did a news item about a survey from LendingTree where they found about 70% of people who received forbearance during the ongoing crisis didn't really need it. So,
yes, I'm aware of that.
Is this a big mistake on the part of the lenders and, for that matter, the federal government for pushing forbearance if it was a solution that there was no problem for?
Well, again, that's part of the whole hysteria movement that's occurring with the coronavirus. You say coronavirus, and you get millions of people panicking. We must forgive loans. Well, nothing's happened yet. Yeah, if something's happened, they really don't want to, whether it's Freddie Mac, Fannie Mae, or any lender, they really don't want to go have 90 days later in the loans again. But I think offering it carte blanche up front, no questions asked, that was a kind of a big mistake. Again, you remember all this stuff with the financial crisis.
Oh yeah.
And trying to get a loan modification.
Yeah.
I actually went to a bank's call-in facility and was watching them take requests for, of course, half it was not half, a larger percentage of it was fraud. But even when there was a justifiable case of getting a loan extension or having your loan modified, it was so very difficult because they put in so many hoops to get through. Some people just gave up and they said, nah, nothing. So this time they did the opposite. Now they gave carte blanche. Everyone gets a free pass. And you lay them alone. So you offer people no consequences of skipping 90 days on your payment or 6 months. What do you think they're going to do?
Yeah.
You're asking for trouble. But again, that's part of the problem with that whole forbearance issue.
Yeah.
It was overreaction. Not surprisingly out of Washington.
Yeah. Well, Washington isn't the only place with funky things happening. Up in Ithaca, New York, City Council up there approved a measure for people not having to pay rent during the course of the pandemic. I don't know if that's going to pass because Governor Cuomo has to sign off on it, but do you expect to see more things like this happening around the country?
Well, again, it all depends on the phase 2 of the coronavirus. I'm an empirical guy. I like to see numbers coming up. I don't want to see projections from, what's his name? Dr. Mucci or whatever his name.
Fauci.
Mucci.
Dr. Vinny Boombots, yeah.
Vinny Boombots, yeah. I don't want to hear his projections. His projections have been horrible.
Mm-hmm.
Remember, what was it, 50 million were going to die, or somebody came out and said that. Now, what, 50,000 maybe? Whatever the number is. They get excited and they project a worst case scenario. It's as if an asteroid's going to hit us in the next 10 minutes. But that's always government does that. They like to be hysterical. I don't know whether it's that endomorphins, things pop in your brain when you get hysterical, but yeah, it's a big problem in DC. We have Freddie Mac and Fannie Mae who are multifamily, and that's a big cost to them, is having people suddenly, let's go 6 months on no rent. Rent is demolishing to the economy, which, of course, if you're Antifa, actually 2 students that were Antifa members show up to my class, and we're trying to argue that in the middle of my lecture. I had to kindly ask them to leave the room. I said, the answer to this is stupid, is ridiculous. You're not, obviously don't own property. You would not say that if you own property. So buy a building and give everyone rent it free. See how that goes for you.
Yeah.
But in any case, they don't like that kind of logic. But again, but again, if the Corona 2, let's call it, the second wave doesn't materialize, or if it materializes in such a small fashion, the whole thing, we shouldn't be encouraging people to miss rent or miss mortgage payments through things like forbearance. That's kind of if I was Ben Carson, I would be kind of frantically saying, we got to stop this. This is economically damaging. Who's really want to go and lend in these markets when the government's even encouraging you to miss payments?
Yeah. I don't think Ben Carson does frantic, or if he does, he doesn't do it very well.
Well, it's the worst frantic I've ever seen, because he always has the stone face.
Yeah.
That's what I like about the guy. He's not frantic. Fauci is just always, the world is going to end by next year. But then we just had our Surgeon General came out and said, don't wear masks, they're useless. And this came out and said, you got to wear masks. I still believe the don't wear mask part, but so much of this is just cognitive dissonance.
But that's another video.
That's another video.
Yeah. With this video, last week, one of the big stories in real estate was Quicken Loans announcing they were going to, actually, they didn't announce it. CNBC got leaked news that they were planning an IPO. Do you see more fintechs going that route, or is this just something unique to Quicken?
Well, no, I think it's not just Quicken. All fintechs want to do IPOs. Again, I was consulting with a company that I can't mention, but it was a real estate company, and they were buying properties, and they said, we're going to go IPO. And I said, I wouldn't do that. I said, why not? I said, well, you give up all control. You go IPO, suddenly you have a board of directors and shareholders that may completely disagree with the vision that got you where you are today. And that's what happened. They went IPO, they were taken over, merged with another company. And the guy wrote me not too long ago and said, "Oh my God, I have no control over my own company." I went, "Yeah, but you got a lot of money." That's what all he got. Suddenly this big burst of capital. So he got to do anything he wants. But then they said, "Not so fast. Here's what you're going to have to do." And so I think it's a quicken. I would have predicted we're going to go IPO even earlier than this. But here's the problem with quicken. If they go IPO, then suddenly if they're designated as a lender,
Mhm.
then they might have to start reporting more of their loan numbers.
Yeah.
So I think they will go IPO without having to try to report any of their loan numbers.
I don't
Because
think that's
currently
going to work.
huh?
I don't think that's going to work.
I don't think it's going to work either. So
Yeah.
I think it might be big mistake for them. But
That's what I was sort of confused when I saw the news, because they are number one at what they're doing. But on the flip side, when you're number one, there's only one place you can go from there. So why would they speed that by bringing in a whole new regulatory burden on top of their operations?
well, remember, Dan Gilbert also owns the Cleveland Cavaliers. They also went from NBA champions to bottom of the barrel. So maybe that's the model for his bank. So he's not technically a bank, it's a corporation. So once he declares himself as to be a bank, which he will not do, but there's still going to be greater regulatory oversight now that he's publicly traded, which I think is kind of a
Well,
silly
not
thing.
yet. In fact, he still hasn't announced.
Yep, signed off.
I don't know if this is maybe that's just clever PR on their part to leak it to see what kind of reaction they get,
Sure.
because they haven't committed to anything as far as I know.
I think it's sorry, the expression is crazy town. I don't think it's going to do that. If they could raised 10 times the capital that they currently have and can kind of pick and choose what they have to do and let this get advance warning from shareholders, they might do it. But other than that, I don't think they're going to do that.
Well, Dr. Sanders, my last question, if we were to reconnect 1 year from now, where do you see the U.S. economy at that point?
I think we'll be back in positive GDP range. We'll probably see normal. Actually, they're hoping for a ramp up in GDP because we just went Atlanta Fed, which I encourage all of your listeners to look at. Atlanta Fed GDP now. It gives you a real-time measure of what GDP will look like in each quarter. Last time I looked, it was about negative 50% for Q2. As a student, you're always worried about negative 2% GDP or positive 2% GDP is too low. We're at minus 50%.
Yeah.
So, I mean, again, any rebound is going to be amazing after that. So it's not going to rebound to 2%. It's eventually probably going to, over 4 quarters, it's probably can come back strongly if the politician will leave the economy alone. That's a big issue.
That's a big if.
So I'm kind of pessimistic about that, but let's just say I live in Virginia where we have a kind of a strong-fisted governor who's a doctor, pediatrician, who just likes to shut down the economy. And I don't think he goes in. Then he escapes out to North Carolina and lies on the beach. Do you see that story?
I saw that. I thought Chris Christie was bad, but this is even worse.
Yeah, Chris Christie looks really good compared to this guy. But in any case, I would see some sort of something boom economy in a year. It'll reverse, but again, it will not be the positive labor reports we've seen. We'll see unemployment come down dramatically, but I'm predicting a big loss, permanent job loss for a kind of a 10% of the workforce, thanks to the SARS virus.
I think you mean the coronavirus.
And that too. Actually, my daughter's in nursing and she corrected me and said the coronavirus is a SARS virus.
Oh, then you're correcting me. Point taken.
I have no idea. I just know what Corona is. It's that Mexican beer that I occasionally get, but it turns out it's infectious.
Olé. Dr. Sanders, thanks so much for being part of today's episode. I'm glad to see you. If people wanted to continue the conversation with you, how could they get in touch with you?
Just email me at GMU. Email address is asander7, the number, at gmu.edu. or my blog,
Mhm.
which I'm sure you've seen in
I love your blog, Confounded Interest.
at confoundedinterest.net.
Excellent. Thank you, Dr. Sanders. And folks, we'll see you again next week. Have
Well,
yourselves a
thanks, Phil. Bye-bye.
bye-bye.